Hello, everyone. Thank you for joining us today. My name is Ben Larson. I'm the CEO of Vertosa, where we manufacture reliable, water-stable ingredients for products like Pabst Cannabis Seltzer, Lagunitas Hi-Fi Hops, and Vita Coco's infused coconut water. I'm also the host of Marijuana Today and previously co-founded Gateway, a startup accelerator. So all this to say, I'm fairly well steeped in cannabis startups on the industry side, operator side, and also on the investment side. I have written checks, but I've also received checks, cashed them, spent them, and all that fun stuff too. Over the last 5 years, I've really come to admire a couple people that join me today in this industry. Two people that have been through the ups and downs, have really poured their heart and soul into the industry and continue to build successful businesses on both the investment and the operator side. So super excited to have Andrea Brooks and Emily Paxhia joining me to talk about scaling and raising your cannabis company in the age of COVID. So first up, we have Andrea Brooks. She's the CEO of Sava, a beautiful cannabis delivery company based in the San Francisco Bay Area. Andrea started Sava in 2015. Under her stewardship, Sava has grown from 1 to 35 employees and expanded their product lines to over 50 brands and 500 SKUs. And so this has led to 10x revenue growth and all on certainly what I would consider a shoestring budget, $2 million in total funding to date. So pretty amazing to be operating 5 years on that. So Sava is seeking to raise a Series A in 2021, which I'm really excited to kind of start to follow. Andrea, so great to have you.
Thank you. I'm excited.
All right. And next up, you all know her, hopefully. We have Emily Paxhia, Managing Director of Poseidon Asset Management. Emily launched Poseidon back in 2013 and has since been a steady investor and voice in the space with $145 million under management between two funds and in posting an impressive IRR of 53% on the first fund. Emily is certainly a mainstay in the cannabis industry. So grateful for your time today, Emily. Thank you for joining us.
Thanks for having me. Pleasure to be here.
All right. What a year it's been. I think we had so much hope for 2020 coming out of last year. And it's taken some interesting turns, has it not? But, there's been some silver linings, especially for the cannabis industry, being deemed an essential service and largely seeing some interesting growth opportunities. So I'd love to dive into that. And maybe starting with Andrea, kind of just, what's it been like operating the company through all this and what is, and specifically a delivery company, which is frankly, probably a great positioning for everyone that's sheltering at home.
Yeah. Having been in the industry for 5 years now, you definitely get used to navigating very quick turns and ups and downs, and you just need to be exceptionally agile. So when COVID happened, in some ways it was just, it was like, well, we're going to change everything all over again. But it was an incredible spike in sales. It was like a 60% increase, basically from 1 month to the next, seemingly overnight. And, really it was about meeting that need, keeping the staff as supported and safe and calm as possible. And so it was, both making sure that things were stabilized and structured in a time that felt quite chaotic, and also making sure that for a company such as myself that is focused on e-commerce, that we're able to meet the customer demand and provide that service and take advantage of the opportunity.
Yeah.
So it was a lot of pivoting though, because again, once we've had to deal with major changes with regards to regulations and how we operate as a delivery company. And so really tapping into our resourcefulness of, okay, we're going to have a totally different delivery system overnight. We're using bins, the sanitation, how we interact with the customers, and just pulling together and just revamping everything in a very quick way so we can be as safe as possible. Yeah.
And Emily, I imagine, so taking Andrea's experience and multiplying that by however many companies you have in your portfolio, I'm assuming there were a lot of conversations that you were having in March, maybe even before March, but March, April, and so on and so forth.
Yeah, it was a really interesting time. I would say that basically deployment of capital went on hold during that time while we went into triage mode and preparedness mode for what may come next. As we understand now, at that time, we did not know if we would even be able to stay open as an industry. And boy, are we grateful for, frankly, I would say that constituents really spoke up, because we saw them try to shut it down here in San Francisco and then also in Colorado. And you just saw the lines around the blocks of people freaking out and being like, we have to have access to this. And I think that was every time we see the gauntlet thrown down on this industry, it seems to have to get taken back and we move a step forward. So, we saw it with Jeff Sessions back in the day when he tried to, he rescinded the Cole memo, and we thought that might be a really upsetting time for the industry, but the industry persevered. So we get stronger. But during that time, we were having, board meetings every week, really trying to prepare for what could happen. And we slashed budgets by like 40%, really tried to make sure cash would last well into 2021. And then, some of the teams had to reduce their staffing at that time. But since then, we've seen companies staffing back up. We've seen companies outperforming their projections for 2020, actually. And so we're back on track. And also in that interim, we saw some bridge rounds of financing just to, again, like people who are potentially lining up for Series B. We just didn't know what would be happening in this time. So just basically shoring everything up. And one thing I'll say about cannabis is that we have not been an industry that's flush with capital in many ways compared to our counterparts in other traditional sectors. But I think what that does is make operators like Andrea, frankly, stronger and more prudent about the use of their resources.
Our company, we did one of those kind of 40% cuts, right? And in March and April, it was certainly a lull as everyone was just trying to figure out what was happening with the supply chain and all that. But similar to Andrea, after that, seeing a pretty rapid growth. So, Andrea, you had a 60% increase a month later. Did you even have time to correct, or was it just like, oh, all of a sudden we're going to be very busy, and now we have to be both like prudent and addressing scale? Like, how did you manage that kind of all the competing factors?
And the numbers continued, like it continued through the spring that we were continuing to see growth. So, we came out of 2019, like many companies, I think, again, kind of hearkening back to the cash constraints of this industry. It's not like 2019 was an amazing year for companies to raise. I think a lot of companies were already starting to assess their growth plans versus, break even. And we had already been very surgical about deployment of capital. And we were also raising. So I was getting staffing ready to scale. So we were, it happened a few months earlier than we thought, but we had a really great team in place. So we were able to just bake it in and continue. So there wasn't so much of a course correction other than let's drill down and continue what's working for us, and so we were able to bring on a bit more staff. Our marketing got exceptionally dialed in because you're not really looking at all the various channel, out of home isn't really, something we would invest in. And so just, really digging in deeper to what we were seeing work and just keeping a laser focus on that was what we focused on. And we were also able to initiate some expansion and add some routes that up into Sonoma and Napa beyond what we were doing. So over the course of the first 3 months of COVID, we added on about 20 cities that we were delivering to.
Wow. Yeah, that it brings up an incredible point. It was an opportunity to kind of just really focus on what you could focus on, right? It wasn't as distracting. It wasn't before. There's no conferences to be flying around to. In fact, I think this one was supposed to be in Vegas. So appreciate the fact that I could just walk into my office and do it. So you talked about capital, right? And bringing on a little bit this year, which sounds like great timing to bring on a bit of capital. When this all first hit, I was being told to pretend as if this is the last money you will ever have. Go as conservative as possible, make it work. Which, as Emily pointed out, the cannabis industry is actually historically pretty good at doing, because we've had to in many cases. Where are we now? Like, what do we look like going here into the end of the year, still with COVID kind of, peaking in some parts of the U.S. or maybe across the U.S. And then also the election on the horizon. I have no idea. Like, are people out there raising money again? Are people deploying capital? Emily, what's your perspective on all this?
Oh man, I am worried that people have not learned from previous periods of exuberance in our industry, and it's always difficult, right? Because this industry is extremely hard to invest into, and to do so prudently, because I think people start to see momentum in it. They start to see the expansion and the growth. I mean, we're looking at a 40% year-over-year growth rate in 2020 for this industry alone. The California market is slated to be a $4 billion market. These are not small numbers, and people are starting to pay attention, especially when you've seen, like, for example, the GDP shrank by 32% in Q2 of this year. I should check the Q3 numbers, but I mean, it's just like a vast difference of what's going on from a macro standpoint, aside from the markets running hot. But I think that I've seen money start to come back into the sector again. I mean, back in March, first of all, we were closing our second fund on March 31st. I can't express to you how difficult the conversations were to close those final rounds of capital, because people were just risk off. It was a terrible time to be trying to close money. People were very concerned about what was to come, and rightfully so. And the sector, I think, has seen a slow interest coming back in, but then I've seen some really bizarre decisions being made about huge checks coming into the space at enormous multiples. And frankly, I don't think the diligence has been there. And I don't understand why this happens time and time again. You could look back to 2017 and say the same thing was happening then. And we know what's happened. I mean, MedMen round tripped from, it wasn't even a round trip. They went from $1 billion IPO price to 0.00 was the price target from Canaccord's last update. And it's like, that's the underwriter who took that company public. So, I mean, this is something we have to watch as we go into this next period of expansion in our industry, or else we're not going to progress in terms of capital allocation. And the reason that I'm pretty feisty about this, because when I see these things happen and I see capital destruction at that level, that amount of money that could have been allocated to truly good operators, we could have seen a very significant shift in the perspectives around this industry. You can see the top 4 MSOs that have been sprinting ahead in the last 12 months. If those operators had had the access to capital that some of these other groups had, it could have even been further down the pike. So I can't help but think about it with all of the ancillary companies that have been, struggling to attract capital. So I'm obviously pretty energetic on this topic, but it is something that I'm a little worried about as it starts to demonstrate itself as a sector. I just hope that new entrants into it will look to experienced investors to try to make sure we get the entry points right.
So I actually want to pick on one deal, and it's not like picking on people or anything like that, but like Dutchie pulled in $35 million at a pretty lofty valuation. Again, nothing against Ross and the team. I'm sure, great operators, great guys. But what do you think it is about a company like that will attract that level of capital and exuberance in comparison to Andrea? I know you've had particular experience in, out there raising money, and I don't, maybe you can tell us how chosen, the shoestring budget was, but like, it's just, there's such it's a vastly different story that we're hearing in the market. And maybe we'll let Emily cool down a little bit before she jumps in feisty and let Andrea talk for a little bit here.
I mean, I'm going to get feisty too on this.
All right, here we go.
I define myself as a great CEO. I don't like to be defined by my gender, but let's be real. I'm a woman. Sava is a female-founded company. My other co-founder is female as well. And something that's been standing out to me in all of this and, following like PitchBook and other, financial blogs is that funding to female founded companies is decreasing once again. There's like a 48% drop from Q2 of this year into Q3 of money going to female founders. So this is something I'm looking at. And I think we're right with that drop. It puts us back at 2017 investment numbers. Yet we also, I'm sure, have all read of like how female founded companies stretch a dollar better, build more profitable companies. So when you're talking about these, I'm not going to say anything about, I wish everyone well. I want money coming into the space. I also want to make sure that the experienced operators that know what they're doing are the ones that are getting funded and will succeed. And it is hard when you see some companies that I think have really been doing the right thing still struggle so much to raise capital. And so these are topics, that are discussed, in the background constantly between myself and other female CEOs that feel like we're still kind of scraping by. It keeps you sharp. I think, one of the things that I've had going for me is that I have a nonprofit background. I did development and nonprofits. I knew how to watch every single dollar that ever came in and was ever spent before starting this company. And in the beginning, I don't know if people believe that that was a great transferable skill. It has ended up being invaluable that I know how to manage every little dollar. So it gets me heated because I want to see the right deal flows happening to the right operators. I think different people have opinions on that, but I'm bullish on wanting to see more checks written to female founded companies that have lasted this and dealt with the journey. And I want to be more than, a hashtag or a cool article of how women in weed are killing it. It's getting harder and it's decreasing, and seeing that the funding trends for companies like mine, female founded, is going down is extremely disheartening. Yeah. And, I'm grateful that we've been able to pull in checks. I did close a seed round this year, but it's not any easier. And I feel, it's the amount of people cutting checks is not growing that I'm finding. Like the pool doesn't seem to be improving. You had a little bit more opportunity in that some people had really great liquidity events during COVID. On the opposite end, other people lost capital and got nervous and started, I'm not going to spread anything out anymore. And so lots of, it's riding the waves again in a different context.
Yeah. Emily, kicking it back over to you, like how do you see this impacting the industry, be it the, whether it's one group of founders getting the investments over others, or even just the over exuberance into certain deals? Like what is that overall impact?
Yeah, I think we'll just have to ride through a series of kind of flat to down rounds on the backside of it. If it, there is that mentality that the most well-funded companies will win the day. We know that has not played out in cannabis because, you can be well-funded, but if your burn rate is out of control and you run out of money, it's just math, people. But I think that, I've seen a few times with this happening where it's kind of then you have to backfill, right? So if you can raise a lot of money at a really high valuation, you prevent dilution for you and your investors that were in there early, good for you. but then you've got to really, really work to meet whatever the expectations were at that investment. So I think a lot of the times when I see some of these different multiples, these higher multiples, it's about the future, right? Mm-hmm. And so it's all about execution. And so then you just have to know what your runway is to make sure you can catch up to that, so that then you can go on to raise another higher round. The last time around, we saw this happening. We saw a lot of capital getting put into companies at really extraordinarily high valuations. There weren't the corporate governance measures in place that I would recommend in order to kind of keep an eye on the investment and participate actively. I think I've seen some course correction on that, not just in cannabis, but more broadly speaking. I mean, I think WeWork was a cautionary tale of corporate governance that, Theranos is another example of it, but exuberance happens inside and outside of our sector. But I think corporate governance will help this. And I think there has been more of a focus from the entire investor community around corporate governance and having independent boards of directors involved, having true financial controls, audited financials, or at least kind of third-party qualified financials. Some of these steps that I think are really important. And I think we'll get there. But, I read this article that said, we thought that, COVID and California being so difficult, we would see more companies failing during this time, but turned out that wasn't true. And I would say that is a very outside look of the industry. What I know as an insider as an investor, knowing many co-investors in the space, I know there have been a ton of rescue financings that have gone on in the last year. And when I say rescue financings, that's basically a euphemism for pretty intense deal structuring. And if some of those deal structures can't get cured, I worry that those companies won't be able to attract capital in the future because they have pretty dilutive structures in them. And I don't blame the investors for doing it because essentially it equated to underperforming based on whatever they were targeting. So it's just one of those things. And it's an important thing to know as an investor. If you're just hopping into a deal, you may be kind of a minority investor or a passive investor, but you could be looking at a landslide of dilution if you're entering in at the wrong structure and the wrong valuation. Its structure matters, I would say, just as much as valuation, because there are many features to these deals that can really have an impact down the line, such as warrants or liquidation preferences or you name it. There's important things to pay attention to.
I like that thread. I'm going to pull on it a little bit. As like new investors coming in the space, we're kind of relatively settled in whatever this new normal is, right? Beyond getting into the details and being aware of like what is the future of your equity stake and your capital. What are you looking for in companies, and how are companies approaching kind of scaling and growing in kind of like this new normal?
Well, I mean, we're pretty strict about how we enter into companies. Like, we could love a company, and I can think of a few companies that we passed on because we just couldn't get comfortable with the structure or the valuation, because it just feels like misalignment from the beginning, and then you're never going to kind of get out of that. So even if I love a company, if the structure or the price isn't right, it's, something that we won't do. And we actually just wrote an article, Andres from our team wrote an article about our valuations. And so you can see it on Medium. It's a pretty in-depth review of it, because we're never trying. I know that venture capitalists get a bad reputation, and for a good reason too, for being vulture capitalists or trying to potentially obscure what their end motive is. We're very transparent. We have a timeline for our fund. We have a target return objective. This is how we get there. This is how we value companies in many ways. But I think it matters too, depending on if it's an operating company, meaning if it's touching the plant, or if it's an ancillary company, meaning it's a tech company. And then even within the tech sector, there's different ways we value them depending on the type of role they play in the industry. If they're a marketplace versus a point of sale versus a data analytics company, all of those things have different levers that you pull on to ascribe to the growth and the projections of the company. But for us, it's about getting right alongside the company, having those conversations early, working with the CFOs, CEOs, and understanding what the trajectory is. So So we try to demystify the process right away. And we're focused on Series A or later stage companies. In cannabis, that doesn't always mean the same thing. Like in tech, you kind of know what a Series A company might look like. We just did a round with a Series A company, and they're doing about $200 million in revenue and are EBITDA positive, but it's their first price round of financing. So it's like it's just different in our sector because there's so many different ways that these companies look, even if they are technically at that earlier stage.
Sure. So, Andrea, I'm going to, not to make any assumptions, but I presume you're not quite at $200 million in revenue yet. But as you drive towards 2021 with that kind of Series A on the horizon, knowing what you know after the last 6 months, how are you approaching execution, through the end of the year and on into 2021? Like what's critical for you in growing your company and continuing to make Sava better known in the marketplace?
Sure. I mean, being a tech company, I mean, we're vertically integrated. There's the tech side, the plant touching side, and then we have all of these pieces working together. But really the foundation is technology, and where I think we are carving out a specific niche for ourselves and where the industry needs to improve upon is the tech. For us, our goal is not to be best in class cannabis, it's to be best in class e-commerce. And we're, inspired by, we think of ourselves as kind of a mashup between Etsy, Instacart, and Zappos. And so when I think of moving forward this year and into next, it's continuing to drill down on data capabilities, and drilling down on technology and getting, continuing to be as efficient as possible with capital. It's, even though we closed a round, I'm focused on our runway because we don't really know what the next few months hold. Again, we have the election, we have COVID, it's all a continual like changing landscape, or it feels that way. So for us, it's staying tight on capital, but continuing to forge ahead and grow in the Bay Area. We have been very focused on owning the Bay and, continuing to grow out through Northern California. So that's where we're focusing. We're a couple months away from break even, which is a huge achievement for us. And that was a bit of what we put in place last year, was to, pull back, think about what we're doing, and like, how do we get as big and healthy and strong as possible? And that would be my advice in general to companies. And when I'm talking to people about like what their financial strategy is going into next year, because I will always pick up the phone to any, especially female founded, company that wants my thoughts on something. So getting to break even and building on that is where we're focused. And that, again, the bulk behind that is keeping operational expense as tight as possible, making sure we're experimenting in ways that we measure immediately and can evaluate and analyze, and then staying nimble. We've been able to really dial in our marketing, and then just all the channels that we utilize are measurable channels, and that's been very important for us. Awesome.
Well, we're just about out of time. It was a quick 30 minutes. I appreciate you guys joining me and making yourself available for this. Absolutely awesome to have you. And my light just went off. There we go. This is the work from home world. PoseidonAssetManagement.com, GetSava.com if you want to see what these two lovely ladies are up to. Any parting words, Emily?
No, I mean, I feel like sometimes I can, I do the real talk, but I am also generally an optimist about the potential for this industry. And every time I get to sit with someone like Andrea, seeing founders being really interested in building something for the long haul, and like yourself too, with Vertosa, I feel like there's a lot of good work being done. So I should just say I'm very optimistic about the industry. I just want to make sure we don't repeat the sins of the past.
I had to do the same disclaimer on the last episode of MJ Today, so I totally get you. Hope you guys have a wonderful afternoon. Thank you, everyone else, for joining us. A great conversation, and please follow up if you have any questions. Thank you.